Hey guys, Rafi here from the Endgame Investor. You can find me on Seeking Alpha under the pen name AustroLib. Interesting news today out of Tyson Foods earnings call. CEO Donnie King says he has been seeing unprecedented inflation, which he's been passing down to customers. Now, this is real world data. This is not something out of the manipulated Fed CPI or PCE or whatever three-letter acronym you have. This is an actual CEO of a company talking to investors about how much his costs are going up and his prices as well for food, the most basic of consumer items. This is the earnings call from yesterday from Tyson Foods, one of the biggest meat producers in the USA. Here, CEO Donnie King says, "We have increased prices to help offset significant raw material and supply chain cost inflation. Pricing improved nearly 16% in the quarter versus the comparable period last year. It's going to be the best chicken company, period. That is really exciting." Okay, so 16% pricing improved. That means prices are up overall for Tyson products about 16% across the board. Now let's look at a question that Donnie King got from an investor, Ben Theurer. He is from Barclays Bank. He has a question. He asks, "Thank you very much. Good morning, Donnie and Stuart. First question is on what your plans are within the prepared foods business, just more structurally, clearly. We're seeing how pricing is coming through and impacting our beef and pork results. And that obviously puts a lot of pressure on prepared foods. And you've talked about the input cost pressure by the end of the year. So what is it? What keeps you away from being more aggressive on pricing within the prepared foods business to really pass on more of that internal inflationary pressure we're seeing on the ingredient side?" Donnie King answers, "Yes, that's a great question, Ben. We're still very proud of our prepared foods business. And if I look at the detail behind this, demand is expected to remain elevated. Demand for food elevated? People want to eat things? Amazing. Retail orders, for example, are up 30% versus pre-COVID levels. Food service is showing sequential improvement as well. Improvement, he means higher dollar numbers. These things are more expensive and they're spending more money on them. We have seen accelerating and unprecedented inflation. So what do you do about that? Well, we have significant food service pricing, meaning price hikes, already in the market. Retail pricing will be in the market by September 5th. So food service price hikes are already there. Retail pricing, meaning for the stuff you get out of the freezer in your supermarket, chicken, beef, pork, whatever people eat, will be in the market by September 5th. That's about 25 days away. Today's August 10th. Inflation is up about 14% during our third quarter and 9% year to date. So they have 14% during the quarter, 9% year to date. That's from January. So the rate of price inflation for Tyson Foods is accelerating. We've had, just like other businesses, and this is an important point when it comes to Austrian economics, we've had labor and absenteeism and turnover in the business. We have a number of open positions that certainly has made us inefficient. And so we've got aggressive pricing going on. So what he's saying is that these job openings that can't be filled are making us less efficient. So therefore, prices have to rise even faster in order to recoup those inefficiencies through revenue. So this is the mechanism of stagflation. According to Keynesian economists, stagflation is impossible because if you have more demand, you can't have stagnation. But if you look down on the human level of what is actually going on in the economy, stagflation is when inefficiencies cause price hikes in order to keep profit margins and keep what is left of a business viable. That is stagflation. He continues, "Aggressive revenue management and commercial spend management will help mitigate a portion of these inflationary impacts." So he's basically saying we're trying to be as efficient as we can. It's just not working. "We'll have to get more price," meaning we'll have to have more price hikes. I love this corporate language. "But we're comfortable," and here's the key, "that over time, that our prepared foods, it's a double-digit business for us, and it's just costs are hitting us faster that we can get pricing at this point." So the market is forcing Tyson to raise prices, but it cannot raise prices fast enough to compensate for the increased cost that is hitting it. This is the beginning of the positive feedback loop that will eventually lead to hyperinflation. Once price inflation hits food prices very obviously, no one will be able to deny it anymore, not through any Fed measures. And we see that on the corporate level, on the real level, price inflation is already in the double digits in food. It's already happening. There is nothing that any taper will do about this. This is already baked into the cake. And as I said in yesterday's video, as soon as the narrative changes from monetary policy reactions leading the gold market and smashing it down to no monetary policy decisions the Fed could possibly make will smash inflation down, then gold will control the market instead of the market controlling gold. This is the Endgame Investor. Also live on Seeking Alpha. Please sign up at the link in the description below for a 2-week free trial to guide you through the gold and silver markets, which are about to break higher in a very late 1970s way. And believe me, you don't want to miss it.